Income Statement Basics. The income statement includes the following items for ministry or church borrowers. Regular tithes and offerings. This is regular income that is received on a weekly basis. You should also include one-time income, which might be insurance proceeds, short-term fundraisers, or one-time gifts. You also want to break out and identify rental income, either from properties that you own and lease, or possibly from a cell tower or other source of rental income. You should also identify other income sources. Interest income, in and out income, identified as transfers, or special income for missions trips or other ministry-related sources. It's important that the borrower include all income received on your income statement. If your church is a part of a denomination, some do not require that you report this income as non-tithe and offering income to their district, as they are only assessed on the tithes and offerings income. However, it is important for your church and for the lender to understand all of the income that the church receives. Expenses should include salaries, benefits, and any other form of compensation that is provided to the staff of the church or ministry. This might include housing allowance or additional benefits such as life, medical insurance, or pension expense that is incurred by the ministry. You should also identify denominational assessments. If your church is a member of a denomination, you may be required to pay a denominational assessment monthly, quarterly, or annually. You will also want to break out the debt service or mortgage expense that is incurred by the ministry every month. If you own multiple properties or have multiple loans, you should identify those accordingly so that the church and anyone else looking at the expense report, such as the board, can identify what is being spent on each property. You should also include church and ministry expenses. Separately, you should identify operation and administration, commonly referred to as overhead, but it's helpful to track on a separate line item. The difference between income and expenses is referred to as net income. The borrower should strive to manage expenses to income. In other words, you should not spend more than what you bring in. Although we know that ministries are not in the business to make money, we do encourage you to be good stewards in managing the funds that God has given you to work with.